I hate coconut, not the taste, the consistency. Fresh. Well, this slinky thing here ain't over yet.
Hello everybody, hope you're all doing well. It's Lane here with MetaShackle. Today I'm going to be going over a couple different charts, including the DXY, the Russell 2000, and a couple things in regards to the Bitcoin charts. Because in my opinion, Bitcoin is not looking so hot, even though I think we could see a push upwards, but I think that's only because the market makers might have a few tricks up their sleeves. So let's not waste any more time and let's get into the charts. Use the coupon code 1776 for the entire month of July to get 25% off your first month of my Master Tier memberships on Patreon. I'll see you there. First, taking a look at the DXY, which is the US dollar index. I've been talking about this quite a bit in the last 3 or 4 videos that I've done, as the dollar made a nice reversal right in this area, as I said was very likely. We've been moving upwards, holding this trend line, picking off these gaps and volume imbalances one by one. With the dollar strengthening, it's very likely this is going to put pressure on a lot of cryptocurrencies, which is likely why we haven't seen cryptos like XRP or Bitcoin push upwards, even though XRP, for example, made a pretty decent move over the last few days. But it was likely stifled because of the dollar. Even though they are trading together at times and diverging at other times, there's not very many scenarios where a rising dollar is good for things like cryptocurrencies. Under certain circumstances, it can be very bad. But as you can see here, most of the lower gaps have been filled. This larger gap that I mentioned in my last video has been filled. We have since filled this smaller gap here, and we also have a gap here on the 4-hour, which would take us outside of this trend line if we were able to get up and break through this, which could be incredibly bullish. We have another one way up here, centered right here at about $3.57, which would be an absolutely incredible move and could put pressure on cryptocurrencies like nobody's business. But so far, I do think that even though the dollar has been helping some of these assets at times, for the most part, it looks to be working against them. So as I've been saying, keep your eye on the dollar, because if this gains enough strength, it could really put the hurt on some commodities. Now taking a look at the Russell 2000, this thing has actually been making a decent move for quite some time now. Price has left a couple substantial gaps, with this one right here at about that 2000 area, a smaller one up here centered right at about that 2133, and it's likely that these will get filled at some time because, as you notice, the Russell 2000 is very good about coming down and filling these gaps. It doesn't like to leave these behind. Basically, most places where you see gaps and volume imbalances, price works its way through and fills that gap or imbalance. But it has left a few of them behind. As you've seen with the dollar pushing upwards, once the momentum started to get really strong, we actually saw it start to push down on the Russell 2000. In the last couple days, they've started trading together. But overall, it seems like to me that a lot of people are jumping out of the other indices like the Dow, the S&P, and have been piling in to the Russell 2000, looking for something that's a little more undervalued in comparison. But overall, we've seen a pretty good move here, which can be a good sign for certain digital assets, as a lot of them have been moving up since the April lows back here. And if you look at this chart, the Russell 2000 has been following a similar path moving upwards since that time as well. So if we get into a situation which could essentially be a perfect storm to where we saw the dollar gaining momentum moving up towards that gap at the 103.5 level, we see the Russell 2000 start to pull back, perhaps chasing down these gaps to fill them, as well as this one that's much larger down here at about this 1900 level. We could perhaps see some serious pressure being put on cryptocurrencies if that was to occur. Now jumping over and taking a look at the Bitcoin chart. This is the weekly chart. A lot of people throughout the cryptoverse, on X, on YouTube, pretty much everywhere you look, people are extremely bullish for Bitcoin, calling for it to go to 120, 130, 175,000. Even some estimates as ridiculous as $250,000, $500,000, and I heard on a video today, $1 million, which I think is absolutely ridiculous. And although it could reach prices like that, who knows? It's not the kind of price that's going to be attained within a short period of time. It's taken nearly 15 years for Bitcoin to get to the price that it's at now. It's not going to jump to $1 million next week or next month, not even in this summer. But either way, taking a look at the Bitcoin chart now, this is an ascending wedge pattern, which tends to be generally bearish. This pattern that we're starting to see now, especially at the top, is starting to repeat almost identically what we saw right here going back between the first time it touched this trend line in April of 21 and right here where it was rejected in November of 21 when price had fell back, retracing nearly 77% to the bottom before starting off on the move that we've been seeing since November of 2022. Now that Bitcoin has gotten up here all the way to the top, set a new all-time high right here, now everybody's saying Bitcoin's going to the moon. I heard very little about people wanting to buy Bitcoin and talking Bitcoin up when it was trading down here at about 15 to 20,000. But now that we're up here at 108,000, everybody and their dog is talking about how Bitcoin is the greatest thing since sliced bread. But if you look at this chart, you can see that this pattern that we saw here is starting to repeat right here. They are both at the top of this upper trend line as well, which would seem to suggest that it's close to topping out. When the first pattern failed back here in November of 21, we formed a bearish divergence right here. You can see it on the stochastic. And if we zoom in a little bit closer on this, you can see that back here when we set this high on the initial pattern in April of 2021, price came back consolidated, setting this high here, which took out the previous high here. This high was swept. Then, at the time, the new all-time high came up here being set in that 69,000 range, swept that high. Then we saw the collapse of price from that point. If we swing up here and we look at the current price and what we're seeing in the pattern right now, we came up here, set the all-time high, came up, swept that high, setting a new one here. Price then fell back, consolidated, setting the low right here in April. Price rose up, setting the new all-time high, which is holding now, which swept this previous all-time high. We have now consolidated slightly and pulled back, with this move being upwards, even though volume has been decreasing. And if we look at the pattern overall, you can see that the entire time this pattern has been rising upwards, volume has been decreasing. That's not a good sign. The only time volume started to increase is once we got up here into the top range, which is typical of retail piling in here at the highs. But it looks like to me what we're seeing here is a bull trap. As price is starting to stall out right here, this to me seems like a lot of the bigger positions have been using all of the new buying that has come as a result on platforms like X and YouTube of all these influencers saying that Bitcoin's going to the moon. Bitcoin's going to 250,000. It's going to 500,000. It's going to 1 million. But it looks like to me there's a very good chance that what we could end up seeing here is price pulling up in a type of a fake out to the upside, perhaps even breaking up and out of this trend line to a degree, setting a nice bull trap, sweeping the previous all-time high, getting as many people piling in here as they can, thinking it's going to go to $250,000, 300,000, 500,000, and then the price could do what it did in the previous pattern, reversing instantly and taking them all out, coming down here to, at a minimum, this CME gap, which is centered right at about that 92,280 level. If price breaks through this, I think what we would see is the most likely target would be right here within this yellow box, pushing down to about that 87,000, perhaps even down to 84,000. But if price broke through this lower trend line, that could spell some serious trouble, as price would be likely to at least come down to this 73,000 range. But I think that something's being set up here that nobody's expecting. And right now, we are showing a slight bearish divergence between the stochastic and current price. But this could be negated easily if price came up and took out this all-time high right here, moving upwards, which would wipe that divergence completely off the map. But it seems like to me what we could be seeing is some kind of a setup here to where Bitcoin may come down just a hair, bounce up here, doing a massive fake out to the upside, then coming back down, filling this CME gap, maybe getting a dead cat bounce before coming back down into this yellow box, perhaps even down to this lower trend line. If it broke below this just a little bit, this would cause some serious panic in the crypto sphere, as people would be dying to sell their positions, which would be the perfect situation for smart money to take profits on a percentage of their gains that they've gotten so far. But at a certain point, once retail is scared to death, we could very well see something like this, to where price comes down, hits a certain level down here somewhere, perhaps in this range, then pops up quickly, making a big move to the upside, taking out this previous all-time high, retesting off of this trend line, then moving up to higher ranges, to which we would then see a top with price falling back down and essentially starting the alt season from this point as Bitcoin started to trend down. But as it seems right now, looking at the charts, it looks like to me that Bitcoin is actually bearish, but the market makers are not going to allow an opportunity like this to pass them by. If they can bring this down and fake out retail and absorb the additional liquidity from whatever level this decided to go to, whether it was at the CME gap at 92,000, whether it came down here a little bit lower into the 80,000 range, whether they did the ultimate shakeout, taking it down here into the mid-75s, that move from here, moving up to the 115, 120, 125,000 could be incredibly profitable for them and would occur in a relatively short amount of time, to which then they could use the rush from retail, chasing the price all the way up, to use them for exit liquidity a second time for a larger percentage of their positions, to which then they could pull out the profits from Bitcoin and put them into altcoins as the price of Bitcoin basically came back down to lower levels, which would essentially start the alt season and allow market makers to ride up the altcoins for that run, basically allowing them to double dip and make an absolute fortune, why a big chunk of retail ends up getting wrecked in Bitcoin because they were overly bullish. I know there's some people that are talking about the possibility of Bitcoin breaking up first, hitting about that 114, 115,000 range before coming back down to the CME gap, which is also possible. But I don't think that it's going to go much higher than that. I think about that 112 to 115,000 range is about where we could expect to see it go. It wouldn't take price breaking out of this too much to the upside before people would start to chase. So really it just depends on whether or not that's the case. Do the MMs want to take this down and crush everybody who's been rushing in already? Do they want to do a fake out to the upside towards this upper trend line to get a few more people in before they use them for exit liquidity? Or do they want to go for the ultimate crush and take this thing up way higher, then crash the price back down, using them for exit liquidity all the way down? I think the thing that makes the most sense, especially with as high priced as Bitcoin is now, that in order to use retail for maximum exit liquidity, they're going to have to break this down and use it in multiple stages. So by doing that, I think the fake out to the upside, using them for exit liquidity this direction, perhaps even getting a portion of their holdings back at lower prices, then pushing price up, getting retail to chase yet again, taking it up to a nice new all-time high, topping out, then a reversal comes in that basically uses them as exit liquidity again, perhaps even doing something like this, to where it looks like it's just testing again and it's going to move up higher to get more to sucker in all the way down this. Every little jot and tittle of this would be an opportunity for people to buy back in, thinking that Bitcoin was going to go even higher, which would give the market makers and the hedge funds and the institutions more opportunities to dump their bags at these high price ranges. Then we could see the price collapse. And during a lot of these downs, we could likely see the prices of altcoins starting to rise on those jogs till ultimately we get the altcoin season that we've been waiting for. But when it comes to market makers, you never know what they're going to do because they're masters of market psychology. But I do think that we are going to be coming down, whether we get the little fake out, whether we just fall from here. I think we are at least coming down to the CME gap at about 92,000, and I think it's more likely, if that's the case, that we come down here, that we could actually come down closer to this 87,000 and between that 92,000, somewhere in this range, before we saw a reversal to the upside. Now, it might sound like I'm bearish overall, especially with a lot of the videos that I've been putting out lately, but that's not the case. In the medium term and the long term, I'm very bullish on crypto. But I do think in the short term, we are going to start seeing some fake outs and some flush outs to the downside to get these lower liquidity pools hanging out between these previous lows before we make that move to the upside. Now, whether we see that move to... whether we see the move moving upwards first, then bringing price down, or bringing price down first, which I think is most likely, then going up so that they can maximize these moves from higher levels to use retail as exit liquidity, that's up to the market maker. But we all know at these prices, it's not going to be easy to unload these massive positions that a lot of these hedge funds and institutions have been building. So it's going to most likely be something that takes the most time and provides them the biggest opportunity. I'm almost certain that they've been selling through here, through here, through here, through here, having to just start selling off a little bit at a time as they can to try and not move the market too much or to scare everybody. All we can do is watch the charts, think about it, try to come up with our best guess, try to make a decision on what we think is going to happen, then position ourselves accordingly. But one thing's for sure, when this alt season does hit, it's going to be the most spectacular thing we have seen in a long time. So whatever you do, do not miss it.